Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Wednesday, September 17th. The euro advanced during the overnight session, trading a range of approximately 200 pips as the dollar weakened across the board. However, once the pair touched the high of the previous session, some short orders hit the market. The euro then advanced as traders bought oil and other commodities. The euro area trade deficit rose to negative 6.4 billion in July, seasonally adjusted. Analysts had anticipated a much smaller read of negative 3.5 billion. Furthermore, June's trade gap was also revised higher from negative 3 billion to negative 3.5 billion. Euro area exports to the US, the second biggest buyer of the region's goods, have fallen 4% from a year earlier, the most since 2003 as economic expansion there has eased. The 4-hour chart shows that the euro still has not signaled long just yet, but a break above 1.4500, which also corresponds to the 62% retracement of the move lower, will get it there. The pound traded in a wide 195 pip range since the new trading session started, but entered the US session a mere 25 pips higher. The 20-day simple moving average and the LFB R1 at 1.7970 provided strong resistance during the overnight sessions, and once hit, a wave of short orders hit the market, causing the pair to fall as much as 100 pips in a little more than 15 minutes. During the New York session, the pair advanced to a high made September 15th at 1.8127, but found resistance there. The Bank of England's minutes from the latest meeting, held September 3rd and 4th, shows the bank is starting to have a less inflationary outlook, as inflation is expected to fall later this year. The voting was split 8-1, with Mr. Blanchflower voting for an immediate reduction in the overnight rate of 50 basis points. The unemployment rate increased again in the UK. The release number of 5.5% is higher than market expectations. The unemployment rate has started to rise as the UK economy continues to show signs of fatigue. We nailed the 1.7900 area on the 30-minute chart on Tuesday, and once followed through with the trendline break in the members chart area. The upside targets are easy to define. The Aussie erased all of the strong gains from the Asian session to move 60 pips below the closing price of Tuesday's US session. In the early trading hours, the pair tried to break above the LFB R1 at 0.8065, but the lack of momentum stopped the pair from doing so. The pair made a new low, 0.7800, during the New York session, but rose over 125 pips afterwards. The annualized growth rate in Australia has slowed for a second month in a row, thus reinforcing the RBA's view that their 17 years of economic expansion is cooling down enough to provide some relief by cutting borrowing costs. The annualized growth rate slowed to 3.7% in July from a 4% reading in June. Governor Glenn Stevens recently cut borrowing costs for the first time in 7 years to 7%. The 4-hour chart shows that the Aussie is still in deep short mode against the dollar, and is not being helped by the collapsing of the global equity markets. The loonie fell 80 pips during the overnight sessions, testing the 20-day simple moving average. The pair moved in a 191 pip range for the day and fell about 80 pips from the high in New York as oil and gold advanced. Statistics Canada released the July report on net foreign security purchases, and for the first time since November of 2007, non-residents reduced their holdings of Canadian securities in July. While foreign investors divested themselves to equities and bonds, they added short-term instruments to their portfolios for the 4th consecutive month. At the same time, Canadian investors resumed acquisitions of foreign securities in July. This investment was concentrated in equities as they further reduced their holdings of long-term debt instruments. The 4-hour chart is still in long mode and still has the pair trapped in a sideways channel that is looking really ugly. The Swissy moved lower during the overnight session, trading in a 90 pip range, and entered the US session lower by 30 pips. The pair fell as much as 200 additional pips in the New York session as traders sold equities and bought treasuries. The ZEW report shows the economic conditions in Switzerland are improving. The released number of negative 44.4 for September is much better than the previously released number of negative 79.6. A short signal came on the Swissy. We reported it forming overnight and now looks to have a lot of room to go to the south side. The yen strengthened during the Asian session, but after hitting the LFB R1 at 106.75, the pair started to slide lower. In European trading, the pair continued to trade on the positive side, but the direction of the pair seemed to be heading lower. Once stocks in New York continued to decline, the pair fell an additional 45 pips. The Bank of Japan kept the overnight call rate unchanged at 0.5%. It was the 22nd straight month the bank has kept rates on hold. In the bank's words, the economy has now become sluggish in the face of high commodity prices. In the past, the bank had announced its intention to raise interest rates, although this will happen only when the economy is able to support such a move. For the moment, the bank will focus on the downside risk, since in the second quarter the economy contracted 0.7%. The 30-minute yen chart broke the near-term trend line and now runs into 106.15 as resistance. A break above that hits 107 fairly quickly. On the upcoming economic calendar, we have 3 top-tier releases scheduled for the day. At 0430, we have the retail sales out of the UK, and then at 0800 we have LIBOR rates and monetary policy assessment from Switzerland. In Asian equities, the Nikkei gained 140 points or 1.21% to close at 11,749. The Australian S&P ASX slipped 28 points or 0.6% to close at 4722. In European stocks, the German DAX lost 104 points or 1.75% to close at 5860. The UK FTSE fell 113 points or 2.25% to close at 4912. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 10,609 after falling 449 points or 4.06%. The S&P closed at 1156, down 57 points or 4.71%, while the Nasdaq finished trading at 2,098 with a loss of 109 points or 4.94%. Crude oil for October delivery rose $6.20 or 6.8% to close at $97.35 a barrel. Gold futures for December delivery gained $70 or 9% to $850 an ounce. This is the biggest one-day advance in 9 years as traders sought a haven in precious metals. In Treasuries, 10-year note yields declined 4.7 basis points to 3.381%. The 2-year notes yield fell 15.5 basis points to 1.620%. This is still 38 basis points below the Fed's overnight rate. Overall, the dollar was weaker against major currencies as strains in the financial markets and the continued weakness in housing sector continued to weigh on sentiment. Housing starts fell 6.2% in August, to the fewest number since January of 1991. For the year to August, starts declined 33.1%, and building permits fell by 8.9% to the fewest since February of 1991. August single-family housing starts decreased 1.9% to 630,000. Construction of housing with 2 or more units fell 15.1% to 265,000. Within that category, groundbreakings of homes with 5 or more units or multifamily were 16.6% lower. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.